In terms of the outlook for Asian equity markets, what is the outlook? Do you expect stocks to fall further? Which areas are going to be the worst hit? Which are going to be the least hit?
Well, I mean, as a comment, I would say first, markets obviously peak out when everything looks best, and they bottom out when things look horrible. So in this sense, we have now the Goldilocks outlook, and things look fantastic. And this is precisely the climate during which stocks could actually make a longer-term high and start to decline. Secondly, since everybody's been talking about excess liquidity, we would have to define what liquidity really is. And at every market peak, whether it was Japan in '89 or during the tech bubble or during the emerging market bubble in the late 1990s before the Asian crisis occurred, you heard excess liquidity in different forms. So that is nothing unusual. But basically, at the present time, a very significant part of what people call excess liquidity comes actually from the American current account deficit that is close to 8% of US GDP. So that money, roughly $800 billion, flows into the world and boosts essentially economic activity around the world and liquidity. Now, what has happened over the last 3-4 months is a very significant deterioration in the so-called subprime lending sector in the United States. And of course, a lot of optimists will say, never mind, it won't have an impact on the economy. But I think it will have an impact on the economy in the sense that credit standards are now tightening. And so that leaves the consumer in the United States vulnerable. And my guess would be that actually consumption in the US will hardly grow this year, which means that the trade deficit in the US will not expand, and that therefore international liquidity, while still plentiful, will not grow at an accelerating rate as it did between 2001 and 2006. And therefore, I think that markets may actually come off quite a bit more than what the typical portfolio manager now expects.
When you say quite a bit more, how could you quantify that?
Well, I think that we haven't had a 10% correction in the United States since October 2002, so we are more than 4 years into a bull market without any real correction. And since July last year, we had one of the longest stretches without even a 2% correction until just this week. And so I feel that we could easily have first a correction of, say, 10 to 15% in the S&P. And on this correction, I suppose that the Federal Reserve will start to ease and cut interest rates, and then we could have a summer rally and a rebound. But I doubt that will make new highs, and that as the economy then deteriorates towards the end of the year, that will get another big sell-off in equity markets around the world.
How about here in Asia? Do you see the current sell-off as a buying opportunity? What, if any, stocks would you consider buying here now?
I think it's a good question. Every sell-off is basically a buying opportunity. The question is when. I think the way I look at the position of the markets, they have technically been deteriorating. And I think, of course, it will lead to a buying opportunity, but the buying opportunity, will it occur, say, 5 to 10% lower or 30% lower? My sense is that we could go down in markets like India, China, and also some of the other markets that have become stretched, including Vietnam and Singapore and so forth. We could easily drop 30, 40% before the markets really become buying opportunities.
Now, you're based in Thailand, and the central bank today lifted most restrictions on foreign investment. How do you think that's going to affect the markets?
Well, in principle, what we have in Thailand is a government that doesn't really have a clear direction, and it is not a government that would, let's say, lead to a lot of confidence among investors. Having said that, Thailand is now a typical case of a market which is inexpensive. I don't think there is any catalyst for a very significant rise in the market. At the same time, you can buy perfectly sound companies in Thailand that will give you a dividend yield of, say, 6-7% with a price-earning ratio of around 10 and, say, a book value that is about where the share price is, or even lower, where that the book value is even higher than the market capitalization. So overall, I don't think that you'll have a big risk by being in Thailand. The risk is simply that if other markets around the region come down, that Thailand will not move against the other markets on the upside. And so time is the risk, that your money is idle for a while.
What about the political situation now? We had the finance minister resigning yesterday. He said that he wasn't happy about the former deputy prime minister being asked to join this economic think tank, but he'd already quit after a week in the job. You know, what message is this sending to investors?
Yeah, precisely. It's a government that doesn't have a clear direction. And I think eventually they will need to have elections. But the problem, they can't really have elections because they're obviously concerned that maybe Thaksin would come back. And so my sense is that as an investor, forget about the politics in Thailand, just think that equity valuations know that the political situation is not particularly favorable and conducive for investments, but that's why the valuations are relatively low. My long-term concern is that should one day the present king pass away, that then there is some power vacuum in Thailand, and that if this happens relatively soon, by relatively soon I mean within the next 10 years, that Mr. Thaksin would make a move to come back to Thailand, and then you could face a relatively unstable political situation, because Mr. Thaksin is not acceptable to the aristocracy, the business aristocracy, and the old landed aristocracy of Thailand, whereas he has a lot of support from the simple people.
How about in Japan? You had said in January that Japanese stocks may prove good bets this year. What's your view now?
Well, I think that in Japan you have a situation of a market that may actually outperform other markets around the US after a very disappointing performance in 2006. The reason I'm saying this is, A, the valuations are not terribly stretched, certainly not compared to the level of domestic interest rates. Secondly, the yen is very undervalued from an economics point of view. So what you could get in Japan is a relative outperformance, either because the yen goes up, or because equities go up, or a combination of the two. And relative outperformance certainly vis-à-vis the US and other markets. The second point I'd like to make, which is interesting, when you look at the crisis, or in quotation mark crisis of the last couple of days, when markets came off, immediately the yen strengthens. Why? There's a lot of talk about the carry trade. The carry trade is a phenomenon that comes from different players. There are people in the world that borrow yen and then, say, buy homes in Poland and in all kinds of economies that are relatively high risk, or there's people that borrow yen and invest in India and in China and in relatively risky assets around the world. But there's a second part of the yen carry trade, which is not really a carry trade, it's simply Japanese investors taking yen and buying US treasuries or US equities or instruments that have a higher return than what they get here in the banking system for their deposits. And the moment the Japanese equity market performs better, or the moment foreign asset markets don't perform, that money has a chance to come back. And it's interesting that the yen strength occurred precisely the moment the other markets in the world weakened, China, India, the yen started to strengthen. So it means that some money is immediately flowing back into Japan, and that's why in this environment I'm predicting of markets actually going down this year. I think that Japanese equities or Japanese assets, relatively speaking, could be quite attractive.
How much upside do you expect this year?
Well, I mean, if the whole world markets decline, I don't think that Japan will be on its own rising in value, but I think it can outperform the other markets. In other words, it goes down less, or I think the yen could appreciate.